what we're seeing today is even worse than what we saw during the financial crisis. We are setting up for an economy that we have not seen since the Great Depression. Hi guys, it's Stock Curry, and we have a serious financial crisis on our hands that could be even worse than 2008. Inflation is rising, interest rates are skyrocketing, and the banks are running out of money. We're going to cover it all, so let's get into it. On Tuesday, the stock market suffered its worst day since the crash of 2020. The Dow fell almost 4%, the S&P fell over 4%, and the Nasdaq fell over 5%. This all happened because while inflation was expected to decrease in August, it actually rose. Headline inflation was up 0.1% month over month in August, and core CPI was up over 0.6% month over month. Both of those numbers were significantly higher than expected, with core CPI causing a significant crash in the markets on Tuesday. Even worse was the fact that while headline CPI was up 0.1%, real average hourly earnings were up 0.2%, indicating that a wage growth spiral might be starting. Keep in mind that a wage growth spiral can very quickly cause hyperinflation and could cause inflation to rise, just like Turkey is seeing with 80% year-over-year inflation, and other countries are seeing as well. Even though fuel costs dropped, price increases across the board rose. Food, shelter, and medical services all were sharply higher in August. The Food at Home Index, which points to grocery prices, increased 13.5%. And medical care had a monthly increase of 0.8%, which was the fastest monthly increase since October of 2019. As inflation continues to rise and it's not showing any signs of slowing down, that means the Fed is going to have to become very aggressive or very hawkish in raising interest rates. A 0.75% or even 1% rate increase next week is not off the table. The Fed is going to have to raise interest rates aggressively in order to get inflation down, and these expectations are showing up in the 10-year Treasury notes. In fact, the shorter 2-year Treasury yield just skyrocketed above 3.79%, which is the highest since 2007. Of course, we all know what happened in 2007. It was the start of the financial crisis, and the stock market dropped over 60% over the next year. Unfortunately, what we're seeing today is even worse than what we saw during the financial crisis. A little later in this video, I'm going to explain what's happening in the banking system, and believe me, it's scary. But before we get to that, I want to explain what's happening overall in the economy. Right now, we have inflation like we have not seen since the 1970s. And actually, if we measure inflation based upon how CPI was calculated in 1980, inflation today is actually twice as bad as it was during the 1970s. In addition, we have interest rates skyrocketing like we have not seen since the financial crisis, and we have a banking crisis that we have not seen since the financial crisis. We also have oil prices rising like they did during the 1970 oil embargo. So when you combine the fact that we have inflation that is worse than we have seen since the 1970s, oil prices that have risen like they were in the 1970s, interest rates rising like they did during the financial crisis, and a banking system that is collapsing like we saw during the financial crisis, we are setting up for an economy that we have not seen since the Great Depression. Now, you may have heard that one of the main causes of inflation over the past year and a half has been a tight supply chain. as we have not been able to get enough goods and services sent to customers. That has caused prices to significantly increase because supply has decreased while demand has remained high. And if you remember from your basic economics class in high school or college, as supply goes down and demand remains the same, prices increase in order to get things into equilibrium. This is what has caused inflation over the past year and a half. Well, a lot of people thought that the supply chain issues would improve. Unfortunately, they could get a whole lot worse. The Biden administration is now preparing for a potential railroad worker strike. Two of the largest unions, which combined represent half of all the railroad union workers, are still in negotiations for a pay increase. 60,000 workers are ready to strike, and keep in mind that about 40% of the nation's long-distance trade is moved by rail. What is going to happen if 40% of the nation's trade is shut down because of a railroad worker strike? It could happen if negotiations are not agreed upon by the end of this month. It could be a significant disruption to the supply chain issues that we have here in the United States, and it could cause inflation to skyrocket once again. 10, 12, 14% inflation is not off the table if 40% of the U.S. trade shuts down because goods are no longer able to be moved by railroad. This news was overshadowed by the high CPI report that we got on Tuesday, but it's actually worse news than rising inflation. U.S. banks saw a record $370 billion in deposits lost last quarter. So people had to pull $370 billion out of their savings accounts last quarter in order to sustain their lifestyles. So what? Well, here's the real problem. It's something called fractional reserve banking. Fractional reserve banking is a system here in the United States where only a fraction of deposits are backed by actual cash on hand and available for withdrawal. This is done to expand the economy by freeing up capital for lending. Now, here in the United States, banks only have to hold about 10% of their cash on hand. What this does is it allows banks to 10x the amount of money that they are allowed to lend. So if you put $1 into the bank is allowed to lend $10. And this really helps support the economy. The problem is $370 billion in deposits were withdrawn last quarter. What this means in terms of lending power is that over the past quarter, the lending power of banks has declined by $3.7 trillion. The last time lending dried up to the tune of $3.7 trillion was in 2008. It caused a significant financial crisis here in the United States, as well as globally in many countries around the world. A number of banks went bankrupt. The big problem is that some banks are exempt from holding reserves. So if people pull their money out of the bank all at once, this could cause a bigger problem. And that is a bank run. A bank run occurs when a large number of customers withdraw their deposits simultaneously, and as more and more people withdraw their funds, the probability of a bank default increases, prompting more people to withdraw their deposits. And in extreme cases, the bank's reserves may not be sufficient to cover the withdrawals. The 2008 financial crisis was met with some notable bank runs. Washington Mutual, the sixth largest American financial institution at the time, was shut down by the U.S. Office of Thrift Supervision. Depositors had withdrawn more than $16.7 billion in deposits, causing the bank to run out of short-term cash reserves. The very next day, Wachovia Bank was also shut down for similar reasons when depositors withdrew over $15 billion over a 2-week period. So in 2008, deposits of $16 billion and $15 billion caused bank runs so massive that it caused banks to shut down. Now we're talking about a withdrawal of $370 billion over the past quarter. If this continues, it could cause more bank runs here in the United States. We could be talking about a financial crisis like we have not seen since the Great Depression. Now, I don't want to scare you with all of this negative news. I want you to know the facts so that you can get your portfolio prepared and you can profit off of this information. Would you believe that on Tuesday, our Discord had the most profitable day ever? This person made a 128% profit on their S&P 500 put. Another made a 138% profit on an SPY put. Another is up 54% on an SPY put. Somebody else made a 153% profit on an Apple put. An 88% profit on a NASDAQ put. And a 134% profit on another NASDAQ put. Somebody else in the Discord did a more complicated debit spread and made a 311% profit. And the big winner of the day was this person who made a 353% profit on this QQQ put. Now, new signups for the Discord are closed at this time. We'll open them up in about a month. But I just wanted to show you these profits to give you some hope and some encouragement that you can make a ton of money even as the stock market goes down. Now, if you don't have a broker that allows you to trade options and you're not able to make money as the stock market goes down, I highly recommend that you open an account with Moomoo. Moomoo has extended their 13 free stock promotion through the end of this month. So if you open an account using my link in the description below, you will get up to 13 free stocks with Moomoo. You will get 10 free stocks if you open an account and deposit $100 or more, and you will get 13 free stocks if you open an account and deposit $2,000 or more. It's free money. Don't leave free money on the table. Use my link in the description below to open your Moomoo account and get it deposited and funded so that you can get some free stocks. And then you will have the ability to buy put options and make money as this market goes down. I hope you enjoyed the video and got a lot out of it. Make sure you watch this video that I uploaded yesterday, which will tell you how much the Fed might raise interest rates by next week. Make sure you hit the like button and subscribe, and I will see you soon.